Hello. There is a sleeping giant in the tech world that on the 13th of January just named Pat Gelsinger as their new CEO.
Who the is that guy? Who the is that?
Intel is probably a name that everyone has heard of. With $77.9 billion in reported revenues for 2020, revenue growth for 5 consecutive years to date, gross margins of over 55%, and earnings per share of close to $5 and growing year over year, a recent announced quarterly dividend is actively buying back company shares and is only trading around 12 times earnings. This may be one of the most undervalued stocks currently available on the market that I believe is set to explode as we are witnessing the next great innovation-led tech boom before our very own eyes. Stick around. This is one opportunity I do not want you to be in the dark on. Keep it simple. Before we start, please note I'm not a financial advisor, so please understand this is all for entertainment only. I'm going to share with you 3 reasons why I think Intel is the sleeping giant that I believe is set to rise up and dominate in the coming years. This is not a EPG stock per se, but instead I think this is as easy money comes. No more plugging, let's start drilling. Founded 52 years ago in 1968 by Robert Noyce and Gordon Moore, Intel is a semiconductor chip manufacturer that is currently 45th on the Fortune 500 list of the largest companies in the US. In over 50 years since founding, the company has only had 8 CEOs, including Pat Gelsinger, who officially took up the position in February this year. This is one of the biggest reasons why I believe and why I see Intel having a big coming change that could catapult it right back to the moon. And the reason is this. In Intel's history, the CEOs were founders Robert Noyce and Gordon Moore, followed by Andrew Grove, Craig Barrett, Paul Otellini, Brian Krasnick, and Bob Swan, and now Pat Gelsinger. With the exception of Paul Otellini and the preceding Bob Swan, all 6 other CEOs were engineers by trade. This includes Pat Gelsinger, the former 8-year CEO of VMware, and prior to which he has spent 30 years of his career at Intel. One critical trend to note is that we see some of the most successful companies thrive with the right leadership. And do you know what trend that is? The trend is these companies in recent times, more often than not, have CEOs who are engineers by trade. The Harvard Business Review for the top 100 performing CEOs that was released annually up to 2019 said, and the list even back in 2019 contained a lot of engineer-based CEOs. Intel's 2 biggest rivals include Nvidia and AMD. Nvidia's CEO and founder Jensen Huang came in first position, and no surprise as he mastered in electrical engineering from Stanford University. AMD's Lisa Su took up the CEO position in AMD in 2014, and you probably guessed it, she mastered in electrical engineering at MIT before starting her career at Texas Instruments and IBM before finally landing herself at AMD in 2012. It is a recurring phenomenon that in the most successful companies we are seeing them being led by engineers. Microsoft CEO Satya Nadella, who took the role from Steve Ballmer in 2014, is an electrical engineer who transformed Microsoft since taking over and has made Microsoft so much more relevant and potent today with giant cloud businesses and software that has become so much more integral. Apple CEO Tim Cook started his education with a Bachelor of Science in Industrial Engineering. Former richest man in the world and former Amazon CEO and founder Jeff Bezos has a Bachelor of Science in Engineering, Electrical Engineering, and Computer Science from Princeton University. Google CEO since 2015 is Sundar Pichai, who before moving to the US attained a degree in metallurgical engineering. When arriving in the US, he further studied and gained his master's in materials science and engineering from Stanford University. Are you seeing the trend now? It may be all to do with the psychology and characteristics of an engineer that makes them able to lead companies to huge success because they are programmed to think outside of the box of normality. Engineers shape our world by solving complex problems like building bridges, designing batteries, and even building space rockets to take mankind to Mars. By being able to solve problems, they must at times be able to think outside the realm of what normal people can think. As American inventor Thomas Edison once said, "I have not failed, I've only found 10,000 ways that won't work." Engineers simply do not give up. James James Dyson, who essentially founded this business in his own garage, once said, "Enjoy failure and learn from it. You never learn from success." This mentality is what puts engineers at the pinnacle of human evolution and development. I really believe the appointment of Gelsinger will be the game changer for Intel for the coming 5 foreseeable years ahead. Intel's annual report shows us their 3 largest customers account for 39% of the net revenues for the year and include Dell with 17%, Lenovo with 12%, and HP with 10%. However, did you know 49% of their revenue was derived from their data-centric business, which is essentially their supply of processor chips to the 5G market and data and cloud service providers. Their data-centric businesses include their data center group, Internet of Things group, Mobileye, which we will get into in the next segment, non-volatile memory solutions group, and programmable solutions group. There are not many companies in the world that can boast the following numbers for the full pandemic wipeout year of 2020, so be prepared. Revenues ballooned and came in at a staggering $77.9 billion. Intel invested $13.6 billion into R&D alone, whilst reducing their spending to 25% of revenue. They made capital investments of $14.3 billion and generated $35.6 billion cash from operations with $21.1 billion of free cash flow. They provided $5.6 billion in dividends to shareholders, and they made $14.2 billion worth of share buybacks alone. By far, for me, the most impressive number is the earnings per share of $4.94, which is a raise of 5% year over year. BlackRock, the biggest fund on the planet by managed assets, seems to agree with the numbers and has a disgusting 7% ownership of Intel. Throw in Vanguard, who are the largest institutional owner of Intel with 8% ownership, and according to MarketBeat, the institutional ownership overall is at 63%, and there has been significant increases of institutional buying in the first quarter so far this year. My DCF, based solely on Yahoo Finance and their analyst predictions of a 5.43% growth over the next 5 years, and my estimation that if Yahoo are correct that this figure will fall to 2% for the following 5 years, then my intrinsic value calculation comes to $88. With a 30% margin of safety factor, this comes to $61. Based on today's price of $63, it means Intel is still undervalued, but no one can run a DCF model and get the perfect price valuation because simply it doesn't exist. An estimation of future cash flow is simply that. The stock price movement has recovered since the drop in October last year, but when we zoom out for the last 5 years, we can see it is in a slow, gentle uptrend. Even with some significant number of pullbacks, we do see the $43 level providing some serious support, not on one but on 6 occasions in the last 3 years, which is something to bear in mind. What is one of the best ways to stay competitive with your competitors, or more extreme, to eliminate them altogether? Yes, acquisitions. And Intel have made a lot in their history, a total of 31 in fact. Think about that. They have bought 31 other companies in their 52-year history, which is more than one company every 2 years. Some of the standout acquisitions include $7.6 billion for security software applications McAfee in 2010, $16.7 billion for semiconductor manufacturer Altera, $15 billion for autonomous vehicle technology company Mobileye, and $2 billion for machine learning technology company Habana Labs. We will come back to Mobileye, but first, why is a $2 billion acquisition of Habana a potential game changer for Intel? Israeli company Habana was acquired in December 2019, so over 1 year ago to date. They are a developer of programmable deep learning accelerators for the data center market. They are designing artificial intelligence chips to be plugged into data centers that makes them more efficient and autonomous. This leads us to the new deal with Amazon Web Services, which is a potential money cash cow in the making. Previous CEO Bob Swan explains.
The importance of this announcement today is Habana AI accelerator chips is a company that we acquired just about a year ago, and it was to expand our capabilities in the fastest growing segment of the market, AI chips, in particular accelerating accelerators for AI deep learning, training deep learning models. So it's again one of the fast growing segments of the market. And Amazon is the largest player in cloud service providing to incorporate and validate this Habana technology in its environment to deliver high performance, better productivity for its clients is a very important deal for our Habana team and also for our strategy to expand beyond just the CPU to what we call the XPU environment.
The $15 billion acquisition of Israeli company Mobileye must have raised a lot of eyebrows back in 2017. The autonomous vehicle market, if there was one, was clearly not mainstream at that time, but somehow Intel had the foresight to acquire Mobileye. With the strong EV market boom in 2020, we saw Mobileye revenues up 39% year over year in the fourth quarter of 2020 alone. In December 2020, Mobileye signed a deal with Chinese EV maker NIO to develop robo-taxis. Some people see this as an inevitable future and one that will and could replace all cars in the coming decade. But it's not just the future of AI and autonomous that is providing huge revenues. Mobileye shipped 17.4 million advanced driver assistance systems last year alone, meaning 17.4 million customers bought cars with Mobileye's cameras, chips and software. Mobileye is supplying systems to Nissan, Volkswagen and BMW. But the more impressive business arrangement is that they have somehow managed to bargain for access to sensor data from these customer vehicles, meaning the scale of the program is becoming exponential and is already collecting 6 million kilometers of sensor data every day from vehicles on public roads right now. With over 25 global automakers as customers, over 60 million vehicles worldwide equipped with Mobileye technology, and over 300 car models with Mobileye inside, the future for Mobileye is going to be even more explosive as the world eventually and certainly transitions to autonomous technology. To summarize, I will be starting a new long-term safety vault portfolio. This is my portfolio where I will look to buy stocks that I'm going to lock up for 5 to 10 years minimum. These stocks obviously need to be high conviction stocks that I have strong confidence that will grow and continue to grow and provide solid returns over the long term. Highly volatile and double EPG stocks will not fit this and will remain in my freedom portfolio. As those grow, I will be reducing positions and transitioning some of those gains to start building this vault portfolio. Why? As any stock in my freedom portfolio increases in value exponentially, I need to protect some of those gains from time to time. Gravity does apply to stocks and all stocks are subject to this natural phenomenon without exception. It's just a case of when. Remember, the quicker a stock goes up, the quicker it can come crashing straight back down. Risk is something quite real and it has to be managed and managed within your own investment expectations. I will be investing in some Intel stock, as the current price of $62 is still a bit of a bargain. I see Intel doubling up within 1 or 2 years and adding all those reinvestable dividends. I think this company is a no-brainer and will likely be an investment till I retire, with no price target to sell. Let me know your thoughts in the comments below. There's just way too much that my deep drill revealed to me to go into in this one video. Please do leave me your thoughts in the comments below and thank you for watching. I will be buying some Intel stocks, so do take my analysis with precaution. Do your own due diligence and speak to a professional before you look to invest any of your money. If you enjoyed this deep drill, consider subscribing to the channel and give me a thumbs up. I try to keep this simple and I hope we'll simply see you next time.